Welcome back, VA user. In today's session, we are going to cover the costing. So there are basic costing and the advanced costing. So into the basic costing, we are going to learn what are all the costing methods, what are all the costing levels are available into the Vienna Advantage. And thereafter, we'll do certain practical session and I would showcase you an example by which you would be able to understand how the cost would be calculated for the various costing methods. So let's move on and we'll cover the product costing method, the costing level, the product category, and a use case. So let's move on to the product cost. So what is product cost? The product cost are the direct costs involved in procuring or producing a product. When you will say uh, the direct cost are the material that you are procuring either from the vendor or from some manufacturing unit. So that is basically the direct cost. But there are certain indirect cost is also involved, that is known as the landed cost. That is the cost that incurred to bring the material to our warehouses and thereafter we used to sell. So these kind of landed costs can be freight, labor, custom, etc. And these are also having an important part of the cost. So basically the product cost is a direct and the indirect cost. When we'll talk about, let's say, a trading industry, into the trading industry I used to purchase a product, and whatever the cost incurred to bring the material to my warehouse from the vendor's warehouse, that is indirect cost, while the product cost would be the direct cost. So that is the combination of direct and indirect cost. And once we will come to know about the actual cost, thereafter I would be able to, or the business can be able to place a margin. Let's say I want to earn 25% as margin, so I would place 25% margin and I will sell that product to my customers. So that is basically the product cost. When we'll talk about manufacturing industries, there are various kind of direct and indirect cost. So in such a case, the direct cost are the raw material cost, okay, and the indirect cost can be the labor cost, it can be the machine cost, electricity cost. So all these are direct cost, while the indirect costs are the cost, let's say the repair. Okay, so the repairs can be the indirect cost. So such a kind of cost, when you combine all these costs, thereafter you would be able to generate the cost of your product. So that is basically in terms of manufacturing unit. Now, in terms of the basic costing, there are various costing method as I have mentioned. So in that, one of the costing method is average PO. The other one is the average invoice. We'll talk about the average PO and the average invoice. So this method will calculate the cost of the product based on an overall purchases divided by overall purchase quantity. It means since the system started till now, whatever we have purchased, so the overall purchase price divided by overall purchase quantities brings basically, so that is basically the overall that is basically the average PO, that is uh, overall purchase price divided by overall purchase quantity. But in this case, the prices would be considered from the purchase order and not from the invoices. The average invoice is a similar kind of method where overall purchases divided by the overall purchase quantities, but in this case, the cost would be considered, or the price would be considered from the AP invoices, and that is only the difference between both. And it is the average of all the quantities so far which you have procured. Okay, so that is the weighted average PO and weighted average invoice. The next one is the FIFO and the LIFO. Now this method will be calculated based on the first in and first out method. It means whatever you will purchase first, you have to sell those items first. And in case of LIFO, it is going to be whichever the product you purchase last, you have to sell it out first. So it is last in first out. There is one of the important part in terms of FIFO LIFO is the system generates the queue at the background into the costing engine, and based on that queue, the system maintains the prices, and accordingly, system sells sold the product at the at the time of the sale, the system at the runtime calculates the cost, and it will generate that particular cost based on the queues available into the system. So we'll go into the depth of this as well. Thereafter, we have weighted average PU and the weighted average cost. These are also known as moving average PU and the moving average cost. Now, this cost will calculate the cost of the product based on current cost and current quantity. So it means if you have, let's say, something available into the stock, let's say 10 quantities with the cost of 5 rupees or 5 USD. In such a case, what the system will do, whenever you purchase a new item, then system will multiply this 5 into 10 is equal to 50, and let's say next time you are purchasing the same item 100 quantities at the price of 7. So 7 into 100 plus 5 into 10 divided by 105, that is the total quantity available in your hand. So in this way the system calculates the weighted average PU and the weighted average cost or weighted average invoice. The important part here in terms of the weighted averages, it is based on to the available stock. And the another difference between both of them is the prices would be considered when weighted average PO. It is from the purchase order. When it is weighted average cost, then it is going to be the invoices. Okay. Thereafter, we have one of the method called standard costing, which generally used into the manufacturing industry, which means that this cost contains all the direct and the indirect costs and would be entered by manually. So it means if you're implementing in a manufacturing industry, it is your responsibility to ask for all the FG and SFG products standard costs, so that they will give you the cost and you would be able to import that cost into the costing engine. So that is the standard costing. The next one is the last invoice. The last invoice is basically the price of the last vendor invoice or AP invoice becomes the cost of the product. Whereas in terms of the last PO price, the price of the last PO becomes the cost of the product. These are the two costing method, and the difference only is basically when it is last invoice, the unit price of the product becomes the cost of all the remaining quantities, and when it comes to the last PO price, then the cost or the price of the PO of that particular product become the cost for all the remaining stock. So that's basically the last invoice, the last PO price. The next one is the cost combination, and that's the interesting one and my favorite as well. So in terms of the cost combination, it is explicitly developed by Vienna Advantage. Since all these methods so far we have discussed, only the standard costing is the method where you would be able to enter the data for the cost, and this cost contains all the direct and the indirect cost. Okay. However, as I have mentioned, that the product cost is nothing but it is the combination of direct and indirect cost. And when we'll talk about the direct cost, it can be the raw material. If you are a manufacturing industry, then direct labor, electricity, the machine, all these would come as the direct cost. It means that these are all the activities that are directly involved into the manufacturing operations. However, there is some indirect cost as well. That is basically your repair hours. We will talk about the manufacturing industry. Now, the cost combination is one of the interesting costing method. The reason behind, in if you are not a manufacturing industry and you want to consider the indirect cost, how you would be able to consider that indirect cost, since all the costing methods contains the material cost only. So if you want to combine the indirect cost like freight, resources, or the labor charges, right? Or the custom charges. If you want to combine all these with the product or the material cost, then you would be able to combine, and that is one of the costing method available that has to be commonly used if you are in a trading industry or some other industry, but not belongs to the manufacturing industry. Okay, so that's the cost combination. Now the question is how I would come to know about where I need to configure all these into the Vienna Advantage system. So let's move into the Vienna Advantage system, and thereafter I will let you know where you need to consider all these or configure all these costing methods. So presently I'm at my landing page, and you need to search one of the window called product cost element. At this level you would be able to see that whether your all the costing methods are generated or not generated. If it is not all generated and only few you required and you want to generate in your TNN, then you need to come here. Just you need to click here, new record, give the name, select the cost element type as material. You need to not to select rest others. Only two are functional, that is the material and the cost combination. Rest are not working presently. So you just need to select material. There is a costing method would come. Let's say I'm generating purchase average PO, then I need to select this. If I'm generating it is a weighted average PO, I would select this. If I'm generating for the standard costing, I would give the name as standard costing. I need to select this. So rest all the methods were generated in this way. But if you want to generate a cost combination, in that case you just need to select the cost combination. And when you save this record, at that moment of time your element line would be enabled. So let me showcase you. In case of average PO, you won't be able to do at the level of the element line. You won't be able to do anything. But when you will select the cost combination, at this moment of time you would be able to see that there are certain element lines, and here I just need to select a cost element that is for the material. So you would be able to see here I have prepared the weighted average cost, that is the material cost. Apart from that there is a freight and the custom cost. Now the question is how you want to create the freight and the custom cost. So in that case you need to come here, click onto the new record, and you just need to select this, and in this case costing method is going to be null. And you just need to make sure that all the settings would be in such a way, otherwise you will figure out lot many problems while calculating the cost. Okay, so that is one of the important part. Now we'll move on to the next topic, that is basically the costing levels. Now the costing levels, so there are many of the costing level as I have mentioned that can be used to calculate the product cost at a certain level. When we'll talk about the levels, it means where you want to calculate the cost. So let's suppose if I would select a client as my costing level, it means within the system at the star organization, the system will calculate the cost. What does it means basically? You will assume that there are going to be two legal entities, one is in US and one is in India, and you are procuring at both the legal entities. So the cost would be calculated. There is a common cost for both the entities. It means if you are purchasing something there in dollars and you are purchasing something here in INR, so the cost of the product is very high, and when you are going to sell that same product into the Indian market, it will showcase the losses. You know, the reason behind, since the costs are very higher and that is not the actual sales price into the markets. Let's take an example. I want to purchase a laptop. The cost of the laptop, if I will purchase here in India, it cost me 25,000. When I will purchase there in US, it cost me $2,000. So $2,000 means 1,60,000 is going to be the price of that particular laptop. Now, if I will purchase some quantities here in India and some quantities there in US, my overall cost is going to be, so it is going to be around 1 lakh. But I wouldn't be able to sell that material with the cost of 1 lakh. If I will sell that material with the cost of 1 lakh, it means the system will showcase me that each sale happened in India makes a loss. The reason behind the actual value that you are going to sell is 35,000, and if it is 35,000 and my cost is 1 lakh, then there is going to be a 65,000 loss. So we need to understand this. The client would only work when I have within India I have couple of legal entities, both are procuring at their prices, so the cost would remain a universal cost would come for both the legal entities, and thereafter I would be able to sell that in a certain price, and I can decide for the margins that I want to earn at the top of that cost. Okay, so that is the client level. It means the cost for all the legal entities would be a single cost. Okay, so that's basically the client level. The next level is the organization. When we'll talk about the organization, it means if you have two legal entities, the example which I have taken, that one is in US, one is here in India, then the cost would be maintained for the US at the US organization or the legal entity, and the cost for the India would remain with the Indian organization or Indian legal entity. So that is a segregation between both of them. And using this, I would be able to always trace it out, and I would be able to generate my margin properly, and I can book my profit at the top of the cost. That's basically the organization. The next one is going to be the warehouse. There are certain cases when, let's suppose, you have a single entity and there are four warehouses, but the procurement would be at the level of the central warehouse, and central warehouse will fulfill or replenish the other warehouses. So in such a cases, you would procure a certain item. We have taken the example of laptop. I'm procuring the laptop first time 25,000 100 quantities. I sent 25 no I sent 25 quantities to rest three warehouses. So the cost for all the rest three warehouses remains 25,000. While if I will procure again, and next time I will procure with a higher cost, and my costing method says weighted average invoice, in such a case the cost available at the level of the central warehouse is going to be something 25,000 or something. So if you want to maintain based onto the warehouse, you would be able to do so. The next one is the batch/lot. If the user selects the batch/lot costing level, then system will maintain the costing of the product based on attributes. We have already gone through with attributes. In other videos, you would be able to see how you would be able to configure the attributes and how these attributes can be linked with the product, and later on we can do the transactions using these attributes. Okay. So I would request you can move on and you can check there is attribute video is available where you would be able to configure the attributes. There are going to be three kind of attributes. One is basically the batch or the lots, and the next one is the serial number, and the third one is the general properties of the product. So if I will talk about a t-shirt, the general properties of the product is going to be its color, its size, its brand. So that is also known as attributes. You would be able to configure these attributes into the VA system, and later you can link these attribute groups with the product. The next one is the serial number. If I want to procure a fan, let's suppose, or a AC that contains certain warranty as well, and a unique serial number, in such cases, you would be able to utilize this batch/lot because you want to trace up the serial numbers, and based on those serial number, you want to trace the warranties as well. Similarly, you would be able to set a batch or a lot that can also be configured, and based on that, you would be able to trace the cost of the product. So that is the batch/lot. The next one is basically the warehouse plus batch. As I have mentioned, it is very similar to the warehouse, but it is just a combination of warehouse plus batches/lot. Similarly, it is the organization plus batch. So it is just a combination of at the level of the organization plus the attributes. So you would be able to set up all these costing levels into the VA system. It means there are going to be 10 costing methods and 6 costing level. If I will multiply 10 by 6 is equal to 60 odd cases would be there for your testing or your verification if you want to verify the VA system. There are going to be 60 odd cases. Okay, even more, because there are certain other cases would be there in which your PO price is somewhat different, your invoice price is somewhat different. What would happen to the difference? If I have consumed already before entering the AP invoices, then what would happen? So there are various kind of cases that you just need to think over as per your business, and you just need to verify. Okay, the next another important part is where I would be able to configure the costing level. So into the VA system, you need not to configure the costing level, since the costing levels is a drop down field in that by default certain values would be there. So let me open one of the window, accounting book. So at the level of the accounting book, you would be able to set it up. So you can see the costing level. So here all these 6 costing levels are there. Similarly, you would be able to set at the level of the product category. So at the level of the product category, again, I would be able to set up my costing level. So here is the costing levels. So in this way, you would be able to set up your costing level into the VA system. So it is no master window available into the VA system to configure the costing level. It is just a drop down field which you would be able to figure out at the level of the accounting book and at the level of the product category. Now let's move back, and the next part is basically the product category. Now what's basically the product category? It is a classification of the products. Okay, it can be classified as items, the services, the expenses, the resources. So this kind of product categories you would be able to configure. There are some common examples for the manufacturing industries are going to be raw material, that is going to be semi-finished products, finished products. So many different kind of product categories are there. Now one of the important part is at the level of the product category, you would be able to configure your costing method as well as your costing level, as I have showcased you. Now why this provision is provided at the level of the product category? Since into the business, as I have mentioned, that at the level of the raw material, and it is the local purchase the raw material, in that case is the customer can demand you to link the weighted average PO. But if your overseas purchases for the raw material would be there, then in that case the customer will demand the weighted average invoice. For the SFG and FG, the customer can ask, as I mentioned, for the manufacturing, it is mandatory to select the standard costing. So as you can see, for different product category, different kind of costing method or different kind of costing level can be demanded by the customer, and you would be able to set it up. That's why these two fields are available at the level of the product category, and both these two fields are non-mandatory. It means if you will not select anything, then the system will consider the costing method and the costing level for all the product that comes under that particular product category, where costing level and costing method is not selected. The another important part that I want to cover, if you're selecting the costing method here, then always select your costing level as well. If you are not selecting anything, then don't select in both the fields. Otherwise, there might be possibility you will not figure out the desired results. So that is one of the requests from my side, that while setting up the product categories, select both of them, either both of them or none of them. If you select both of them, then you will get the desired results. If you will not select both of them, in such a cases, then might if you're then system will consider the costing method and the costing level from the accounting books if nothing is selected there, and it would be applied to all the products which are assigned in that particular product category. So that is how you would be able to configure the product category. Now the next part, as I have mentioned, that we are going to cover is the use cases. So I would love to cover one by one the use cases. So into the next video, we are going to cover that how each costing method would work. So far about the basic costing into the Vienna Advantage, this is the entire summary of the basic costing. And I hope you would be able to understand, because we have taken some example and verbally I just tried you to showcase it out the things. But into the next video, I'm going to showcase you one by one all the costing methods, and I have taken the example that is basically the use cases. And I'm hopeful by going through with the next videos, you would be able to clear your thoughts or the concepts that are there into the Vienna Advantage. Till then, thanks a lot. Bye bye.